Hey everybody, how you doing? It's Bruce here, Stock Markets with Bruce. Welcome to my channel today. Got a video today. It's Saturday, the 18th of January, 2025, just so you know what day it is. And I want to talk to you about the shares of Sofi, and I want to talk to you about how you can pull in some serious returns on your money, whether you own Sofi shares or not, but you like the company. You're a fan of Anthony Noto, the CEO. You like the way the company is operating. You respect its growth. We all know that a week from Monday, on the 27th of January, the company will come out with their fourth quarter financial results, which will also mean their year-end numbers will be released as well. And there's a lot of speculation on just how the shares are going to do, what's going to happen. Quick little recap for you for the last year. What have the shares done for Sofi? You can see here that 1658 at the top there is the closing price of the stock after hours yesterday evening, Friday evening. We closed at 1650. If you take a look right above my finger here, we closed at 1650 on the actual exchange on Friday afternoon. And for the year, you can tell, looking back to January 24, February, March 24, April, you can see along the chart there, the shares were under $10 all the way for quite some time until they started to break out midway through October. The company came out with their first quarter numbers in March, and their second quarter numbers in June, and then their third quarter numbers. After the third quarter numbers, it became pretty apparent that they've long ago turned the profit to the profit side of the equation. And they have attracted quite a bit of capital into their operation this past year. They raised $850 million on a cap call financing deal back in, I think, March, and then they raised what was it, $2 billion came in from Fortress Capital, and then just this week we had another cash injection of $525 million just coming into the company. Basically, they're raising more than enough capital to keep writing loans and generating nice income, interest income, and their other divisions are firing on all cylinders. And the street is figuring it out that this company is for real. It's a fintech machine. It's been nicknamed the American Express of fintech. And here we are at 1658. The high for the year, 1719, I believe, that's in jeopardy of falling as soon as next Tuesday, Wednesday, Thursday. We'll see before the earnings, and then we'll see how it does after. Now, there's talk out there that the shares are going to reach the 20 to 25 level. There's a lot of speculation that a year from now, they will be higher than that. And some of the arguments being made to talk about how far this stock can go comes right down to the compensation package that has been negotiated between top management and the corporation itself. And the top people running this company, they are very motivated at a $25 to $45 price point for huge stock bonuses. And so here we go. The stock's being recommended more and more by more analysts. The so-called junk analysts that were putting $4 and $5 and $6 target prices on this stock have been eviscerated from credibility. Their credibility shot. The stock is long gone now for 3-4 months past these $8, $9, $10 levels, and some of these analysts still have not upped their numbers to reflect reality. And so the street is ignoring these type of forecasters because obviously it's painfully obvious the company's making a ton of money, growing their memberships by leaps and bounds, and will not go back to where it was 2 years ago. This company's come a long way and is growing very quickly. All right, let's take a look at another chart. I just popped this up a little while ago. This again is yesterday, just yesterday, one-day chart. You can see how the shares have fluctuated here. They were as low as 1618, as high as 1673. If you take a look at the very far end there, at the very bottom, 1719, that is the top price the shares have hit so far this year, a little over a month ago. and a lot of speculation that these shares are going to break through that number. Yesterday's volume is right up here, 40 million traded. That's down 11 million from normal for the last 65 days. However, it's been 4 days of increased volume with the pricing now in this neighborhood instead of in the 13, 14, 15 neighborhood that we saw a week or so ago. Now, if you want to make some money on SoFi, you have several ways to make money on SoFi if you believe the shares are going to go up in price. First of all, if you believe the shares are going to go to the 2025 neighborhood sometime this year in 2025, sooner rather than later, or in 3 months, 6 months from now, 9 months from now, but sometime during the year, you believe the shares are going to reach the 2025 area. Couple things. One, if you're a shareholder, hold on to the stock. Don't do anything. Just let the shares fluctuate and ride the wave. If you're not a shareholder, go out there and buy the stock. Sure, you can buy the stock at these levels. Look for a dip if there is one. Grab it, sit back, fold your arms, say thank you very much. May I have another? But there's another way to make money off of this trade. There's a way to enjoy the upside of SoFi without owning the shares. There's a way to make money on this strategy and collect interest on top of that. And let me show you what I'm talking about here. If you take a look at this little picture I've put up here, don't mind me jumping around here on my screen, but this here is at the very top, that blue box, 1650 is the final trade Friday afternoon. Below that, you'll see two numbers, 17 and 20. All right, those are put contracts on SoFi, the $17 puts and the $20 puts. And if we go across the screen here, you'll notice the $20 puts. You'll see the number beside 20. It says 615, 615. That was the last trade for the put contracts on Friday. They were down 15 cents on the session. The 605 and 620 numbers, that is the bid ask, the last buyer and seller market. And 354 was how many contracts traded on Friday, and 6253 is how many contracts exist at that price point for January January 2026 expiry. These contracts will go until Jan 2026 before they expire. And at $6.15 a share or per contract, if you know anything about options, what this means is anyone who buys this contract for $6.15 can, anytime they want, sell the shares at $20 to anyone else who's short the contract. So if you are going to be an option writer, which is what I'm going to tell you to be, you're going to sell a $20 put contract. You'll collect $6.15, and you're obligating yourself to buy the shares at $20 a share minus the $6.15 credit you've just been paid, and you're on the hook for $13.85 for a $16.50 stock now. If the shares stay at $16.50 between now and next January, this contract will not be worth $6.15 anymore. It'll be worth about $3.50, because between $20 and $16.50, the contract only has a $3.50 book value. So it will depreciate to that. If the shares break the $20 level, $20 or higher, these contracts a year from now will be absolutely worthless. And if you write this contract, you keep all $6.15 and your capital to put up the trade. You need $2,000 in cash or equivalent to be able to write a contract like that, a $20 contract, because these contracts are multiples of 100 shares. So you put up $2,000, you get $615, and now you fold your arms and wait and see what happens. All right. Now, an example that I'm going to show you, and you have to forgive me for how bad this can be. We're going to find out in just a second. Just bear with me while I set this up. I'm going to show you here a video that I shot with my phone on notes that I've written about an option trade you could consider, where you can haul in a 52.3% return on your money if it all works out. All right, so let's take a look at this. You'll notice here, I'm going to stop this at the top of the page. Today's date, January the 18th. Sofi, January 17th, yesterday, closed at $16.50 a share. The next line indicates that the put contracts we just talked about for January the 20th closed at $6.15 a piece. They were $6.05 to $6.20 bid ask. Last trade $6.15. And I'm talking about the idea of what did I do? Here we go. I'm talking about the idea of if you own 1,000 shares and you sell them right now for $16.50, you would haul in $16,500. Now, let me pause this again. In reality, you don't have to own any shares right now to write any put contracts. You need cash to write put contracts. And so if you've got $16,500 or more, or $2,000 or more, frankly, you can write cash secured puts. And in this example, I'm showing viewers of mine who are fans of this company, Sofi, that if you sell your 1,000 shares at $16.50 a share, you'll bring in $16,500, as this example shows, and that will give you enough capital to write 8 cash secured puts. Each one, you need $2,000. 8 times $2,000 is $16,000. You can now write 8 of these contracts. And if you notice on the sheet there, where I talk about 8 times $20 Jan 26 cash secured puts at $2,000 each equals $615 last trade times 8 contracts, which is $4,920 in cash, or a return of 30.75% on your actual total capital. And you're on the hook for a $13.85 exercise price on the stock. Okay. Now, if we go forward and just wait for this to reload, we go a little further here, you'll notice that you'll still have cash left over because you needed $16,000, not $16,500, to write these puts. So you'll have a cash balance now of where am I? Sorry, folks, I am scrambling here while this is moving. And don't mind me. Here we go. Let's go back to here. You brought in a $49.20, and you had 500 cash left over. You now have $5,420. You'll see that on the second line here. Then you can write 2 more contracts for $2,000 each, bringing in another $1,230. Plus, with your leftover change, you have $2,650, which now allows you to write yet another single call put contract at $2,000, bringing in another $615, and your final cash balance will be $1,265, and you'll have written 11 cash secured puts. The total value of this trade is $22,000 in cash secured puts, and the cash balance, and you're sitting on $23,265. If you have done that move, let me go back again here. You now are in a position where you could start earning interest on your cash balance. Now, let's just go right about here where my finger is right at that line there. The total cash on hand in your account will be $23,265 because you sold 1,000 shares for $16,500. You use that capital to write put contracts, and all the money from the put contracts let you write more. So instead of having $16,500 in stock, you have cash on hand $23,265. If you're going to earn interest on that money, you can buy ETFs that are trading out there. You can buy treasury bill ETFs in the US and or all the way up to corporate bond ETFs, and they will yield you anywhere from approximately 5 to 8%. Depending on the ETF you're acquiring. And if you do that at 5%, you're going to bring in about $1,160 in cash per year. At up to 8%, you'll bring in $1,870 in interest per year. And that will be added to your game. So here's what I've done. Going back to this number right up here, the $16,500. What I've done there is I've said to myself, I had 1,000 shares and I sold them at $16.50. Now I don't have any shares, but I do have $23,265. That used to be represented by 1,000 shares. But because I sold the shares and wrote the puts and wrote more puts and wrote another put, I'm sitting on $23,265. And that means, in my mind, the 1,000 shares I started with are now worth $23.26 each with this cash move on cash secured puts. And if you add interest to this deal and you take the 8%, or just take the most optimistic one, you take 8%, you're going to bring in $1,870 additional capital. If you just sit on this put for a whole year, that'll add $1.87 a share to the value of your 2326 stock, taking your share value to, at the very bottom there, $25.13 a share. And at $25.13 a share versus $16.50 a share to start with, the difference is $8.63 a share in your favor, and the profit percentage on that $16.50 stock, adding $8.63 profit, is 52.3%. Now, this assumes a couple of things, and this is why you have to bear with me here. Number one, you had 1,000 shares, or you had $16,500. You wrote 8 puts, then you wrote 2 more, then you wrote another one. The puts never got exercised during the year. The shares likely have risen. That's what we think is going to happen. That's our gut feel on Sofi. The shares break $20 a share, even if they just sit at $20 a share. The puts will be worthless. You won't have to buy them back. They'll just die. You'll keep all the capital that you hauled in, which is now $22,000 that's sitting there, plus the balance you had, plus the interest you've made. You're sitting on $25,000 plus dollars. You used to have 1,000 shares. If you look at the 25 grand and go, that used to represent 1,000 shares, you have a $25 stock position in your hands. The shares are trading at 20, 21, 22. You're actually ahead of the market. The market has gone up from 16.50 to 22.50. It's gone up $6 a share. Your cash has gone up $8 a share. Your value, your gain, it's gone up $8 plus a share. You made over $8,000. That's a 52% return on your money if nothing happens. Now, you have so many other variables and choices that you can play with here. Of course, if the shares are sitting at $16.50 a year from now, those puts are worth $3.50 each, not $6.15. You'll buy them back for $3.50. Enjoy the gain from $6.15 to $3.50, and you'll turn around and you will likely write another 1-year cash secured put contract for the next year, January 2027, and you'll likely write a $25 contract or $20 contract, and you may haul in another $6.15, and so that's adding $2.60 in cash to your account from the new position. Obviously, if the shares just go to 20, you will let them die worthless if you want, or you can buy them right towards their last few weeks and months for very little money, and you'll roll right into $25 or $20 put contracts for Jan 2027. If the shares in the next month or two very quickly run into the 2022 level, then these puts will be they won't be $6.15 anymore, because they will drop value as the shares go up. Every dollar the shares go towards $20, these puts will become worth less money. And if the shares did reach $20 or $21 a share a month from now, the likelihood is that these contracts will be trading at about $2.25, maybe $2.15. You'll be up $4 on these contracts. So you'll buy them back, and you will now write January $25 put contracts. You'll just add $5 to the strike price. You'll haul in something like $6.15, $6.50, and you'll add $4 in cash to your account for every put that you're writing at that level. So you're getting richer even faster. So of course, the shares want to go up, you're going to get richer because the puts will drop in value and you'll roll into higher strikes. The shares don't do much of anything. They just reach this 1920 level and they kind of hang around there. The puts will shrink down to their book value. The shares stay right where they are at 16.50. A year from now, the puts are worth $3.50. If the shares go down to $15 a year from now, the puts are worth $5 each. You received $6.15 when you sold them. You're still ahead of $1.15 a share. And the shares went down in price. So if you just held the stock that you had for $16.50, you've lost $1.50 down to $15 there. Where here, you sold the shares at $16.50, wrote these puts, and you're actually up $1.15 on top of the $16.50 plus the interest. And you're likely sitting on now more like $18.50 of value per share because you sold your share and wrote cash secured puts. That's the strategy that I'm trying to bring to your table here. If you want to understand how to do all this, and this isn't, for the novice investor, I understand. If you've never seen an option trade before or anything like this, writing options, you have long left this video. You've packed it in and ran for the hills. But if you're still here and you like the idea of a 52% return on just a scenario where the stock just goes to 20, let alone 25 or 30, whatever other analysts are talking about, if 52% turns you on, then you're in the right place. And what you need to do is, if you watch me daily, I'm on the air Monday to Friday when the markets are open at 8 in the morning and 8:30 in the morning. For my first 30 minutes every day, I'm on the air for these folks right here, my Gold Bagel members of my channel. From 8:30 on, anyone can join in. But if you really want to understand how to do option work, go here. Go to my website, stockmarketswithbruce.ca, and if you head up over here, there's my address there. You'll find my homepage right there. From there, you can click on to the classes area, and there are 18 classes available for you to watch on how to write stock options. What are they all about? How to do it, and each class goes into different aspects of option writing. Each one builds upon the next. And you can take these anytime you like, one at a time, all you like. They're now $200 a piece. They're available one at a time whenever you want them, and you decide how many you want to get when you want to get them. If you, however, wish to have a one-on-one with me, you want to talk to me in person privately, I do offer one-on-one sessions through my website, or just watch me live every day. We talk about this. You can reach out to me through my own email and say, Bruce, Uncle Bruce, I'd like to have a one-on-one session with you to talk to you about my situation. I have $50,000, and I'm thinking, why don't I do this with all $50,000 instead of trying to buy a stock and hope it goes up? Can you walk me through this? We'll work it out. We'll get you going on what kind of classes you should be taking, which ones you should take, if not all of them, obviously, and we'll get you comfortable with how to do stock, cash secured put right. Thank you for hanging out with me today. If you've been here this long, you've got great endurance. Join me every day, Monday to Friday, 8 and 8:30 Eastern Time, live, where the instructor is on the air while the market is pre-marketing and opening, and you can follow all kinds of other option writers live with me on these two shows, because they'll be commenting live while the market is running, and we talk about option strategies all the time. Also, Wednesday nights, 7 o'clock Eastern, Primetime Live with Uncle Bruce for Gold Bagel members only. If you become a Gold Bagel member, you join the upper echelon of this channel. You really are serious about making money in this business, in this market. If you're sick and tired of playing hot tips and rumors and the right sector, or you're trying to buy the stock that certain politicians are buying and you're hoping your timing is okay, you're sick and tired of all that, maybe option writing is where you really want to be. This is where you become the casino and you offer people the chance to gamble against your slot machines, which is option writing. It's up to you. I'd love to see you. Love to have you join us. Thank you again for being with me today. And we'll see you here, well, in this case, Tuesday morning coming up after Martin Luther King Day. And we'll be running the show then to see what's going to happen in Washington. Thank you all so much. Have a wonderful day and a great weekend.